Welcome everyone to our presentations. We are Group 54 and today we're gonna talk about implications of Trump's tariff on the US dollar. So we have 4 parts: general, US free trade ideology, justification and impact, policy hold and restorations expectations, and last one is Trump's debt elimination potential. So let's move to the first part, general. What are reciprocal tariffs? Tariffs are the government tax on products and services imported from other nations. They are employed to raise the cost of import goods, to safeguard local economy, encourage customers to purchase native items, or bring in money for the government. And the reciprocal tariffs are based on trade practices that Trump claims are unfair to the US. So what's happening? During the Trump administrations, the US import tax on import from China, the European Union, Mexico, and Canada. These were part of a large America First economic policy aimed at decreasing the US trade deficit, stimulating American manufacturing, and combating what the administrations call unfair trade practice. In response, numerous countries imposed reciprocal tariffs, penalizing US products such as soybeans, automobiles, and whiskey. This results in a trade war, particularly with China. In particular, reciprocal tariff levying the same levies on a trading partner as the United States seems reasonable. In actuality, though, it disregards the intricacies of international trade and the interdependence of contemporary economies. Even if they might temporarily have some domestic industries, reciprocal tariffs usually backfire. They incite reprisals, harm US exporters, particularly in the agriculture sectors, and raise prices for American consumers and companies. About the role of USD, as the main reserve and transactions currency in the world, the US dollar USD is essential to the international trade. This function was impacted by Trump's tariff policy in multiple ways. About the strength of the dollar, as tariffs put pressure on international markets, investors sought refuge in the USD, which increased its value. The effectiveness of tariff was undermined by a stronger dollar, which increased the cost of US export and decreased the cost of import. About the dollar dominance versus the de-dollarizations, fearing that the dollar would be weaponized in trade and subject to penalties, the trade war forced several nations, particularly China and Russia, to think about abandoning in international commerce.
So what to expect during the 90-day pause excluding China? So during the 90-day pause in US trade policy excluding China, we can expect several short-term effects both economically and diplomatically. So first, we should expect a temporary market relief. So we've seen the global stock markets bounce back very strongly during the pause. And this rebound reflects investor optimism that tensions might ease, at least temporarily, and it's a window of relief from trade uncertainties. Second, we can expect intensified diplomatic efforts among countries such as EU, Canada, and Japan. So they're using this time to renegotiate trade exclusions and delay tariff enforcement. These talks suggest a strategic attempt to realign with US trade policy without sparking further conflict. Third, USD stability. So the US dollar continues to function as the dominant trade currency during this pause. While it remains stable for now, global partners are watching closely for any shifts. We can also expect China's exclusion. However, China's exclusion from these negotiations signals a persistent strategic rivalry. This could provoke retaliatory measures and create further economic divisions. Finally, we can expect underlying uncertainty. So even with this temporary calm, there's underlying uncertainty. Policy unpredictability is testing global trust in the US dollar's long-term reliability. So we can conclude that while the 90-day pause creates a sort of a breathing space, it's also a moment of quiet before potential escalation. So what happens after the 90 days when the policy is restored? So once the 90-day pause ends and the policy is restored, several major shifts are likely to take place. First, we can expect a global retaliation. So trade tensions are expected to rise sharply, and countries may respond with reciprocal tariffs, escalating protectionism and damaging global trade flows. Second, we can expect market volatility to return. So investor confidence may decline, especially in emerging markets, as uncertainty and risk increase. We could also see significant fluctuations in asset prices and capital flight. We can also expect increased cost of U.S. imports, so tariffs will likely raise the price of imported goods in the U.S., which contributes to domestic inflation and reducing consumers' real purchasing power. The trust in the U.S. dollar may erode as well, so countries may begin seeking alternatives to U.S. dollar as a dominant trade currency. So this will mark a shift toward financial diversification and de-dollarization potentially. We can also expect that the US dollar will still be dominant, but it will raise several concerns. So although the US dollar will likely remain dominant, its role is being increasingly questioned. So US trade policies and the use of the dollar as a political tool are encouraging nations to explore other options, as we are seeing happening. So in short, the end of the 90-day pause may reignite tensions, weaken global trust in the US dollar, and intensify global efforts to diversify away from the US, away from US-centric trade structures.
Hi, my name is Josh, and I'll be taking a look at how Trump's trade policies can be justified, as well as comparing these policies to Nixon's and his historic victory. So, how can these tariffs be justified? Well, Trump's tariffs resonate strongly with voters in industrial regions by promising to preserve and boost American manufacturing jobs. Many of these regions have experienced prolonged economic decline due to outsourcing, global competition, and factory closures. Trump's policies directly address the frustrations of workers who feel neglected by previous trade policies, offering protection against further job losses and proposing a revival of traditional manufacturing industries through targeted tariffs. Tariffs can also be justified as responses to unfair trade practices by other nations, aiming to secure more favorable trade agreements, especially concerning relations with China. So, will Trump win this game like Nixon did? Well, Nixon's bold economic policies, particularly ending the gold standard in 1971, initially destabilized markets, but ultimately enhanced the US economic position in the short term. Similarly, Trump's tariff strategy seeks immediate economic and political gains domestically, employing bold protectionist moves to achieve short-term objectives. However, there are a few key contextual differences. Nixon's policies changes took place in an era of clear US economic dominance, whereas Trump's tariffs arise within a complex global economy, which complicates potential outcomes. So, Trump's tariffs differ notably from Nixon's measures and are unlikely to result in another historic victory, as they may substantially undermine international confidence in the US economy and currency, and could also harm the US's international trade relations.
Will the tariffs eliminate the US national debt? It is highly unlikely that the tariffs alone can eliminate the US national debt. While tariffs do generate government revenue, they are a minor and unstable source compared to the income taxes or broader fiscal reform. In fact, any revenue gains are often offset by retaliatory tariffs, reduce export competitiveness, and slow economic growth, all of which can shrink the government's tax base. Could the tariffs cause a severe crash or crisis? Yes, if mishandled. Tariffs can contribute to rising prices, disrupted supply chains, and declining investor confidence, particularly if major trading partners retaliate. We saw early signs of this during the Trump era, with volatility in financial markets and distress in agriculture and manufacturing. If extended or escalated, this protectionist trend risks triggering a global downturn, especially if combined with poor fiscal and monetary management. Will it end of the US dollars as the world's fiat currency? Not immediately, but Trump's aggressive use of tariffs and the broader trend of weaponizing the dollar may accelerate efforts by the countries to diversify away from the US dollar. As Josh and Alex noted, China and Russia have already taken steps in that direction. If more countries pursue bilateral trade in non-US dollar currencies, adopt alternative reserves like gold or the euro or yuan or yen, or build new regional systems, the US dollar's dominance could erode gradually. This will make the US borrowing more expensive and complicate future debt management. So to conclude that, Trump's tariffs are unlikely to eliminate the national debt. However, I wouldn't say that it's going to cause a severe market crash like the Great Depression in the 1930s. However, it could expose the US economy to greater risks, including inflation, trade retaliation, and global moves away from the US dollar. And if it's mismanaged, they could contribute a serious economic downturn and challenge the US dollar's role as the world's primary fiat currency.
Here is our reference. It's the end of our presentations. Thank you for your attention.